Seems like finally the summer doldrums have kicked in. Maybe traders finally took that week off from vacation, and maybe they'll take the next couple weeks off. Typically during the summer months, you do get some more quietish type days. We haven't seen that of late. Seen more volatile up and down moves. So today is the exception with a inside day here, lower high from Friday's trade, a higher low from Friday's trade. The market is trading in between what I call support and resistance, or what a lot of people call support and resistance. The support comes against, I'm going to go to the daily chart, this blue line right here. This blue line represents the 100-day moving average. That level comes in at 143.61. Let's go to the hourly chart, and you can see this little move to the downside here, the move below this trend line, below this 100-bar moving average, below this 50% retracement, came in at the 143.65 level. Market found some support buyers against that level. Risk was defined, risk was limited. The market rebounded back up to the upside, but since that rebound, we've been able to hold below this trio of resistance levels, including the 100-hour moving average. It's a blue line that comes in at 143.84. We have this trend line. This trend line currently comes in around the 143.87, and the 50% retracement of the move down from the high that we saw last week to the low that we saw last week. That's the midpoint of that range of this up and down range that we've been in, and that level comes in at 143.87 as well. The high for the move since reaching in the low has come in at 143.86.5. So being able to stay below that level keeps the bears a little bit more in control at the moment here, after failing up here against this trend line here. This one, 2 different points, the market tried to move above that level. No momentum. When you have no momentum, in a non-trending, quiet summer doldrums type day, what you're going to do is have those buyers who bought the market up be happy to take their profit against that high and have the market move to the downside. So there we have it. A look at if the market is going to move higher, we're going to need to break above the 87 level. Look for support against 61, break through the 61 level. The next target would be the 200-hour moving average, or actually even between there would be the low for the day at around the 44 level, and then we have the 200-hour moving average coming in at the 33 level below. Let's take a look at the sterling versus US dollar next, this currency pair. We've been tracking this 100-hour moving average going all the way back to this date, August 12th. Market's been above that level in these channels here. We started to lose momentum on Friday's trade. Market sold off rather dramatically to the downside, came down to our support against the 100-hour moving average in overnight trading, and kind of just lethargically fell below that level. This time when the market fell as opposed to earlier in the London session, we did see some further momentum to the downside. This was helped out by the euro moving lower as well, and just something to do, if you will, for the market traders. The market went down to the lows from Friday, above the lows from Thursday, above the 38.2% retracement of this last move to the upside, which took the price from the low going back to November 11th to our high price that we reached here on Friday's trade. So with the inability to move any lower, in fact the inability to the ability to reject the low from Thursday here, and the market since wandered back to the upside. 200 or 100-hour moving average comes in at the 164.89 level. Do you do anything at this level right here? Not sure. Not real hurry to do a trade in these types of markets. Got to be really patient because the pips are not all that great. So you got to get good trade locations so you can stay in the trade. Let's take a look at the dollar versus yen as our next currency pair. We've got the hourly chart here. We had a little surge to the upside in the opening. Then we had another surge that took the price up to the high that we saw last, let's call it August 11th, around 7 or 8 days ago. The market could not sustain that move and quickly moved back down. That move to the downside found support against this old trend line after breaking through the 100-hour moving average. And since that time, it said, we can't go to the upside, can't go to the downside. Let's stay above the 100 and 200-bar moving average. And that's what it's done here for the entire New York session. 76.68 is where that support comes in. That's a 200-hour moving average. 76.61 is a 100-hour moving average. Stay above both those levels, And the bulls have a little bit of the advantage here today. On Friday it was to the downside. We need to get the market back above that level. Today it's to the upside. Um, those people who are long the dollar versus yen are obviously looking for any sort of action by the Bank of Japan to help their position out. Absent that, you're going to need to see some technical moves through this area right here at the 92 to 99 level, and then the 77.22 level. Seems an obvious level that the market's going to have to get through. Take a look at the dollar versus Swiss. Like the dollar versus yen, might as well just focus on the hourly chart, up and down here for this currency pair. The support, we had a double bottom here around the 78.37. That occurred during the Asian London session there. And since the New York session, we've found some support against this other level here. This other level kind of is defined. Going back to, probably here and then iterated here at the 78.54 level. Had a number of different lows on the hourly bar here during this section right here, and in the New York session here we found a couple lows right around that 78.54 level. Helped force the market back up to the upside, but you can see here the reluctance to move above the 100-hour moving average. Admittedly, the market did move above that moving average during the first few hours of trading, but that was quickly reversed and moved back to the downside. Now we're going to need to see a move above the 79.02 level, and then above this, these highs from Friday's trade. Market came down, came to the trend line, came up to test this area right here, and had a double high there. Also, we're getting this trend line where we have 1, 2, 3 different points along that line. All this make this level right here at the 79.20 level a key level for the dollar versus Swiss. Clearly, if the market is going to force its way to the upside here, continue its trend. I'm going to zoom in here and show you the longer term picture. A large sharp move to the upside last week, largely consolidated, but if we're going to move and continue this move to the upside here, we're going to need to break through that 20 level, break through the 100 bar moving average first, and then break through the 20 level secondly. Let's take a look at the Aussie versus US dollar. We looked at this currency pair this morning. Off the daily chart on Friday, we bounced off the 200-day moving average. We have this old trend line coming across here, which currently comes in right around the current levels where the market is trading. That level comes in at 104.17. We're a little bit above that level at around the 828 level. Off of the hourly chart, however, the market had its attempt to move to the upside here, an attempt to break further above the 50% retracement and move toward the highs that we saw on Friday. But we got above the 50% and then came back down to the 100 bar moving average, fell below that 100 bar moving average, and we've been below that level since after testing it two separate occasions here in the last couple hours of trading. 104.46 is that level. Get above that level, and the market has potential to move higher, stay below that level, and we're in between our goalposts, in between our 100 and 200 bar moving average. We're going to be looking for a break either to the upside or to the downside here. Sellers against the 100 bar moving average currently are in charge here, keeping the bearish bias with a break below the 200 bar moving average coming in at the 103.95 level at the moment. And I thought I'd bring up the New Zealand versus US dollars, the next currency pair. Why? Because we went and tested the 100-day moving average on two separate occasions over the last couple of days. Actually, called three tests down there. Yet on Friday's trade, the low reached 81.93, and that the low reached 81.70, and the 100 bar moving average came at 61. Today, the low reached 81.58, and the 100 bar moving average came in at 81.66. So one day a little bit below, one day a little bit above. Each of the times the market has not been able to sustain, and you can see the market is back up, currently trading at the 82.50 level. Let's take a look at the hourly chart, and the move off of the lows there, off of that 100-day moving average, forced the market right up to our 100 and 200 bar moving average here. Both of those moving averages are starting to converge. The 200s right below it at 82.78, the 100s at 82.85, 86, and currently they're just a little bit lower than those levels when the market went right up and tested that level over the last 5 or 6 hours. We've seen a little bit of corrective move to the downside, but as you can see, the range is very narrow, very narrow and contained by the 38.2% retracement. This keeps the bulls a little bit in charge from a daily perspective. Had a sharp move to the upside, found a resistance, came down 38.2, and you should see a rotation back up to the upside after this little bull flag, if you will. If that's the case, you should see a move back above the 76 or level, and that would give you the clues of further upside momentum for the New Zealand versus US dollar. So there you have it, a look at some of the major currency pairs in this quiet session. Seeing the euro come off a little bit, that's helping the dollar a bit against the other major currency pairs. My name is Greg Michalowski. I'm the Chief Currency Analyst for FXDD. Look forward to seeing you in our webinar series starting up tomorrow morning. See you then. Bye-bye now.